Hey everyone, welcome to the Trendline Invest channel. A lot of us, when we invest or we trade, we get stuck in stocks and we cannot find exits. And exit is the most important thing in trading or investing because that's when you make money. In this video, I'm going to discuss three basic setups that will help you find at what points are stocks actually topped and what is that point that you have to exit after a stock has made a top. That's going to be a primary focus for today's video, and I'm sure it's going to help you at least save some money and save some of your hard-earned money and capital as well. Okay, so let's get started. The first setup we're going to look at today is called the failure swing setup. Now, this is just a name. So what I want to focus today is more on the concept rather than the name. So let's get started with this first setup. Now, what is a failure swing? Now, all these three setups I'm going to discuss today can be applied on all time frames. So here I've taken the example of India Mart on the weekly time frame. Now, for a failure swing setup to form, the first thing the stock has to do is the stock has to be in an uptrend, because remember, all these three setups are setups to find when a stock has made a top and now when it's going to reverse. That's what we're going to find. So for that, the stock has to be in an uptrend. Here, if you see clearly, India Mart has been in an uptrend, and then the stock has to make a peak, a highest high, and then the stock has to start correcting, right? Now, before the stock goes down, it has to form another high, but this high has to be lower than the previous high. That's the first rule. The highest high that was formed and the second high should not be at the same level, rather the second high should be lower than the previous high. So basically you should see some kind of pattern like this, and then now if you see here, we formed a high, here we formed a low, and here we formed another lower high. Now this high is lower than this high, right? And when the stock breaks this swing low over here at this point, now that is when we say that this swing is a failure swing. So basically the stock tried to swing here and go higher, but then it broke the previous swing low and it closed with a bearish red candle. And for that reason, this is called a failure swing setup. And at this point, it's most likely that the stock has made a top and the stock is about to reverse. Now, if you look at the next candles, the stock kind of retested here around the 4 weeks. It kind of went sideways and then it started falling. And we all know that India Mart went all the way down to 3,000 in the next few weeks. And that's the first setup I want to discuss today, which is failure swing. Now, you need to practice these setups on charts and try to find this and mark them on your charts in order to practice. And if it has to come naturally to you, you need to practice day in and day out on hundreds and thousands of stocks. Okay, so I hope you're going to do that practice and you're going to let me know if you have any doubts. Okay, so the second setup today is going to be the non-failure swing, right? Now it's slightly different than the other one, but the concept is still going to be the same. You still have to break a swing low, but here the swing low is slightly different. Now the rule goes like this. First, the stock has to be in an uptrend, because we're looking at how to identify tops in a stock which is an uptrend and how to find the reversal points. So the stock has to be in an uptrend. So it has to form a high, then it has to form a swing low, then it has to cross that previous high and it has to make a new high. Okay, so that's nothing but the stock has been an uptrend, but then the stock, after making a high, kind of breaks this previous swing low and goes below that previous swing low. Right now, at this point, you do not sell yet. You're still trying to assess what the stock is doing, right? Because the trend is still up, and now you had a higher high, probably you had a lower low, but you've still not had a lower high. Now, a lower low has been formed. For a downtrend to start, you need also a lower high. Now, in the previous setup, this was the lower high, but here, after this point, we've not had a lower high. But then the lower high formed around this point, right? So the stock came down. Now we had a lower low, but now the lower high is forming here. Now this peak is lower than this peak over here or this high over here. So basically now we had a higher high here at this point. Now we had a lower high and we had a lower low, and the stock finally breaks this point, and that is the point when the stock has reversed, and that's a confirmation whether the stock has made a top, and now you have to exit the stock and you have to get out. Okay, I'll repeat, summarize. You need a higher high first, and then the stock has to make two things. One is a lower high, and then the stock has to make a lower low compared to the previous low, right? So once these two conditions are met and the stock breaks this low point over here, then we have a lower high, lower low, which is a downtrend, and the downtrend sell signal has triggered and the stock is not an uptrend anymore. Now, this is an example of Tata Motors recently in September 2022. And since then, the stock has been falling and we had a strong downtrend. And now the stock is probably looking good again. Okay, so that's the second, which is called the non-failure swing setup. The highest high crosses the previous high, highest high crosses the previous high, but then falls below the swing low and then rises again and falls below the recent swing low again. Okay, so that's the second setup. Now, the last but final setup, most of us know this, it's called the double top, which is one of the most easiest setups to follow. Now, a double top is nothing but similar to a rectangle setup. You can say the highs need to be almost at the same levels, not exactly, but slightly higher or slightly lower, but it needs to be around the same levels. And then we have the swing low over here, and the stock breaks the swing low with a bearish candle. And at that point is when you say the trend has reversed. Now, double tops are a very, very, very easy setup to spot and a very easy setup to trade. So if a stock forms a double top and then it breaks down with good volumes and good candles, I don't have the volumes here, but if it has good volumes and good candle, bearish candle, then the stock has made a top and we are probably not going to see the stock making new highs anytime soon now. Another point I want to make here is now these two non-failure swing and double top setups that I mentioned here are on daily charts. Now remember, if these setups form on the weekly or a monthly charts, then there's a very, very high chance that you are not going to see any returns in that stock, at least for the next few months or a few years or so. It depends on what location these stocks patterns, these setups form. But if it forms after a very long-term uptrend, please exit stock and save your money and save your capital. Now, that's what I wanted to cover today. Now, I also have this planned 3 basic setups to find a stock reversing after making a bottom. If you want me to make this video, do let me know in the comments and I will do this video as the next video. Okay, so otherwise I'm going to leave you here. I hope you enjoyed this video. Don't forget to subscribe and like my channel, like my video as well, and don't forget to share this video with your friends. So I'm going to leave you here. Take care, stay safe and trade safe until I see you in another video. Bye bye.